Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, August 1st, 2025. S&P 500 currently sitting at 6243. I'm David Zarling. I'm here with Ian McMillan. Just had the Hall of Fame game last night, and we just have a movement in the market today, the first day of August, that's using the S&P, basically erased all of July's gains. Markets happen fast.
That's the trade-off we got for getting football back.
Yeah.
Said you get your football back, but we're going to take some money from you.
So uptrend's still intact, but August is here.
August is here. A lot of talk about seasonality coming into August. And it has had quite a few people on the edge of their seats. Hard for me to get excited about it and kind of until we see something out of it. But the Warriors may have been right. Even if we don't have a big drawdown, probably some volatility for a bit.
Well, yeah, you can never invest solely on seasonality. It's just about paying attention on when it's here and when it's not. And August is notoriously light, and in post-election years, even more so. I mean, post-election years, which we're in, August is one of the worst months, right behind February. So not surprising to the least. But at the same time, you can't really guess on that. There's been previous times where the market still rises in August and September.
August 20, so would that have been August 2021?
Well, even if you look back at, post-election years, I see you're looking at like when President Biden
I was just trying to think, yeah, it got a little choppy in there, August into September.
So, yeah, I mean, it's a normal part of markets. And what I find interesting, a couple things, is that the Dow Jones never made a new high. Not that's the end all be all. I mean, Dow Jones is a laggard, but plenty of other indices had made new highs. And then I would say, even starting yesterday, the uptick in put call ratio, investors taking on hedges quickly, it's when they don't that you get nervous. Like, it's actually a good characteristic to see the put call ratio rise pretty heavily on days like yesterday and today, because all those guys are future buying fuel. It's when they don't. It's when they don't hedge that the animal spirits are intact and a further correction could be bigger. But there's some, important levels when you look at S&P 500. I think this July price action from the first part of July near 6240 on the S&P 500 is important. And then the prior highs near 6120 to 6140. Mm-hmm. You want to be able to hold that. And then you got the 200-day moving average at 5,900. Dare I say it?
Yeah, if we get down to it doesn't happen that way. Certainly, yeah, you don't want a false breakdown. I mean, always my vote is if we got to do it, let's just go sideways. So that would be healthy. It's not as fun. I like to see stocks go up every week just as much as the next guy. But if we got to take a break, much rather just go sideways between here and the February highs, 6140, 6150, somewhere in there. We never got, now I'll tell you, and we kind of discussed this the other day on the call. So Dow never got to all-time highs. It kind of got up here, stuck at like 45,000, around there, I think. Maybe a little over 45,000. Equal weight S&P. All never got to all-time highs. Neither did Russell 2000. I don't know if anyone was necessarily holding their breath for that one.
Well, the Russell 2000 is still well off its highs, below its own 200-day.
Flat 200-day.
But which we know can be a hot mess.
Terrible.
We're bouncing today off the volume-weighted average price in small caps that goes back to its high in November of 24. So we'll see if we can stick it here with the jump in put call, jump in the VIX. Volatility is in the 20s using the VIX. Is there more to happen? To be determined, but I think it's healthy for a market that's had a substantial move off of the April lows to go ahead and have some price discovery to the downside, even when it doesn't feel well. And it matches the seasonality.
Does.
One of the important things you can do as a technician is look across the landscape and see where there's relative strength and relative weakness. And I think it's interesting that even in today's tape, growth over value is still holding up well. High beta over
It
low vol.
is.
High beta over low vol. Yes, it's down. That relationship's down today, but it's not so much so that it causes concern. Momentum factor, if we use MTUM, holding up well on a relative basis. In fact, outperforming today. So on a big down
Breath
day
has
like
been
that,
fine.
and breadth has been fine. I know it's weakened. I know, by some measurements, it's kind of fallen off during July. Totally get that.
Advanced decline line. I should have specified. Yeah, definitely some divergences. If you're looking at kind of like shorter term, if you're looking at like 50, 100-day moving average participation, there's definitely some divergences there. But advanced decline lines still okay.
Yeah, I agree. There's breadth measurements that are just fine, and there's breadth measurements that have had a divergence for a month. And those divergences don't have to matter at all, and they only tend to matter when they do. One of those things, again, there's no signal necessarily there. That's just environmental information. And so now we got to see if we're in price discovery mode to the downside. We got to see where buyers are willing to step up or sellers are willing to be done selling. But it's interesting that growth over value still exists. High beta over low vol still exists. Momentum factor still holding up. I mean, those are some pretty good environmental pieces of information. But on the flip side, do we have a false breakout in mag stocks? Could be a little bit of a problem. Does that resolve itself sideways, or do we continue to see downward pressure on the really large names, especially right after earnings here? I think that's important to pay attention to.
That reaction, yesterday's reaction, right? I mean, we had a little bit of, what was it, Wednesday? A rough close, and then, or a rough day, better close. Right into the, what was it, Microsoft and Meta that reported.
Yep.
And yeah, that excitement was pretty much contained to those two stocks yesterday. Usually would have seen a little bit more. I mentioned this before we hopped on here, but the fact that semiconductors, I know neither of those two stocks are semiconductors, but typically you would have seen bullish action flow through to a lot of things, I would say, under the NASDAQ. Usually those produce kind of large ripple effects across anything tech related.
Mm-hmm.
So with those two earnings reports and it really giving no boost to anything else in tech yesterday, it was kind of another sign that, okay, we might be getting a little lethargic out here, at least when looking at the broad indices.
Yeah, for sure. Going back to that, we've had such a great run off of the April lows after the tariff tantrum. I think it's important to note that this type of price action, you have one of two ways to view it. Are you selling everything because that's the top is in, or are you viewing any short-term correction as an opportunity to add exposure? And I think based on the trend data that we follow, that the trend is still intact. Whether you're looking at horizontal price levels or something as simple as a 200-day moving average, the trend is still up. And so now you're, dare I say, looking to buy the dip, which isn't the mantra right now out there. There's a lot of negativity, supposed to have a recession. The market can't keep doing this. And maybe that's true. We'll find out 6 to 12 months from now. But typically you don't see that type of sentiment out there and the market follow. And if we do get a further corrective behavior, let's say 3 to 7%, sentiment's probably only going to get more negative. Put call ratio will only rise higher. VIX will only rise higher. And that's typically not what you see in your market tops, but we'll see. That's why we study price.
Yeah, and everyone seems so on the edge of their seats, but maybe everyone's right. It just kind of feels like we've been waiting for this drop. Maybe this is it. And then, but to your point, then we get spooked so quickly. And when I say we, or actually would not put Dave and I in that category, But market to participants as a whole, just the quick spikes in put to call, the sentiment out there also makes me think that come Monday, we're talking about all-time highs again. It's kind of the market it's been. I have no idea. The most important thing, to Dave's point, is that the trend does remain up. I think as long as you're above a rising 200 day and as long as you're above 6150, you can, pick your spots to add exposure, rotate exposure. I think gold looks attractive.
Yeah,
now.
Gold is setting up really nicely considering what the dollar did last month. The dollar being so strong last month and printing a bullish engulfing candle, that gold held up the way it has. I think that's tremendous information for gold, which we've been talking about for a while as far as digesting the move that it had. Might provide an opportunity.
I think it's giving you an entry on a relative chart. So, stocks had a super strong July. Gold goes sideways. So that relative chart, which had quite the move earlier in the year, has now reset itself back to a 200-day, back to kind of this base that it broke out of. I'm not going to say it's textbook, but there's a lot of clues there that tell you if you didn't get in on gold the first time, or maybe you mistimed it, you could be getting a second shot at it here.
Yeah, for the second half of the year, completely agree with that. And on the flip side, you have copper that just got hammered this week. I can't recall last time I've seen.
I don't think ever.
Yeah, copper
20% in a day. Yeah,
down 20%. Now recording what a technician would call a false breakout. We had broke out above $5.25. Since lost that very quickly this week, and I understand there's tariff news around that. Totally get it. But when you just look at price, copper damaged. On the flip side, you get gold holding up as well as it did with the dollar rising. I don't think that's a bad thing for gold or precious metals at all.
No.
I think silver, yeah.
Yeah, silver. I mean, it's in an uptrend. I would say the relative chart is still not. I mean, it could be. I could see it happening here over the next couple of weeks.
Well, are you saying you're keeping an open mind, Ian?
I am. It also has a relative base it needs to break out of.
I think keeping an open mind is an important part of the investment process. When you use price, you're just having a thesis, and price has to confirm or refute that thesis. And so it allows you to keep an open mind rather than marrying yourself to the narrative of the day, the news cycle, you name it. Oh, this stock has to do this, or the precious metals have to do that, or copper has to do this based on, economic reports, news narratives. You just use price. Keep it simple.
Yep.
I think I'll highlight the supporter of this podcast right now, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. So we thank them for their support. Ian, anything else you want to touch base on? We haven't talked anything about crypto, foreign
crypto's
equities.
held up. Bitcoin's held up well. I would say kind of in that gold category. Bitcoin specifically. Some other cryptos. I don't know. Alt season seems a little delayed right now. We'll see.
So Bitcoin holding up. We'll see what they do with Ripple here. Solana kind of broke down.
What looked really good in July? Semiconductors. I think it's still very techy and very growthy.
Yes.
And across all the market caps, you see that, especially the one that I would say mid-cap growth versus mid-cap value was the one that kind of was lacking, but now you're seeing mid-cap growth. There's a lot of talk about how AI is, right? We're on the cusp of the next .com bubble. I have no idea if that's true, but those themes have not gone anywhere. Semiconductors, quantum computing, Mag 7, all that techie stuff. Once we got done with the tariff scare in April, we went right back to that stuff, and that has continued to be your outperformers even through July. I'm sure a lot of them will get hurt or get hit and underperform the market. It's higher beta stuff. But that theme has not gone. I mean, I can say that theme hasn't gone anywhere for 5 years almost.
Right. I think if you were to, look at things that might be a concern, it would be the false breakout in MAGs. It'd also be things like junk bonds.
Yeah.
Kind of leaving an island here versus IEF or intermediate term quality bonds. And then, but at the same time, you look at CCC credit spreads and they're not blowing out. They're bouncing a little bit here, but they're still sliding downwards. So liquidity is fine. So yes, there's a mixed bag. And you could look back and be like, see, that was that false breakout in MAGs. That was the beginning. It could be. Not saying it's not, but we haven't seen credit spreads blow out. You still have junk bonds versus these intermediate bonds in a range that goes back to 24. So we'll see. And foreign stocks continue to cool off in July. When you look at it, you look at something like VU versus the S&P, still in that downtrend that goes back for over 10 years on a flat 200-day relative 200-day moving average. So we'll see if foreign stocks get bid up here again in the second part of the year. We'll find out.
Yeah, I'm kind of hoping Argentina comes back.
Yeah, that was
some have held up, like the Taiwans and that have been kind of Vietnam strong lately on a relative basis. We'll see.
Well, even, what I consider a current bellwether for the international is Greece, holding up really well on a relative basis today, continuing to outperform international stocks.
And this is probably one of those days. I mean, should we stay here? Definitely one of those days where you want to, after the close, peruse green.
Right, where the relative strength was. So did you watch the game last night?
I did watch the game. We watched the first half. I was so excited to have football back.
Was it any good? I only caught clips of the game. It was
good.
Lions versus Chargers, right?
Yeah. I mean, it was football, man. I would take any level of football. Yeah, Trey Lance started for the Chargers. They were doing some Lions fumbled the opening kickoff, which has just got to be brutal. If you're trying to make the team and you fumble the very opening kickoff to preseason. So I feel for that guy. Yeah, it was a good game. You asked me before we got on, and I did notice this, and I'm sure many of our listeners did too. Is it fair to say that neither of us are fans of the virtual first downs?
No, virtual first downs.
So dumb.
Well, even saying it out loud, like you virtually got a first down.
I like having the line on the screen, like the yellow line that they put across the field.
Yeah, I like that, yeah.
But this idea that we're not going to have the chain crews measure, I don't know. This is how, everything, like they say, everything is computer.
Oh, I get it, but like
that's the big meme going around right now, right? Everything is computer. We're going to have virtual strike zones, I bet. These umpires don't stop being terrible in Major League Baseball.
Yeah, and I think
they'll just have AI do it.
The whole field being virtual, though, like they went to a field that was virtual, like the game was played at the Chargers, but the field they show was the Lions. So, like, how are you supposed to know whether that's real? You just think back, even the phrase like, hey, you virtually made it to the bathroom. What? No, I didn't make it. Like, I just feel like it's too, it feels like it could be manipulated pretty easy too.
Yeah.
Like, here's an image. They got the first down, or here's an image. They didn't get it.
That's with the guy and the. We measured it with AI. We're sure we got the right call.
Well, and why does the whole thing have to be virtual? Meaning like the image and everything. Why can't they just put the line like they do before on the field with a sensor, and they got it? I don't know.
Because there's a sensor in the ball.
No,
because they do that in soccer, right?
Yeah, I think they should have. I think they should have a sensor in the ball, and we don't have to take time to throw an image up on the screen. You either got it or you didn't. Pretty easy. I don't know. Seems odd. I'm not a fan currently. I could be convinced, maybe this is a slow step towards some of those things. And because I would
Maybe
miss,
we're not the target market. Maybe we're getting pushed out
yeah, maybe we're not who they're
as the
appealing to.
ideal viewers. They don't want middle-aged men anymore.
No, because I like umpires still, even though they stink at their calls. At least they got challenges. It brings drama to the game. If you want
There's got to be human. I don't know. Right. I think it's just the whole idea that we're losing the human element to a lot of sports.
Yeah, it's kind of crazy. So
At least the officiating part of sports.
Currently not a fan of virtual first downs. Maybe I'll, because I'll be honest, I was one of those guys. I wasn't initially a fan of the pitch clock, but now I'm a huge fan.
You are? Okay.
Yeah. Yes. I love that the baseball games aren't going 3 hours anymore. I think that's great. 4 hours sometimes.
Yeah.
So maybe I'll come around. Maybe I'll keep an open mind, change my mind. As the data comes in, maybe I'll change. I don't know. Well, I appreciate you doing this. I know there was a week off last week from the podcast. We appreciate everybody listening. Anything else you want to cover, Ian, before we wrap this one up?
No, just that, a lot of these charts are going to look gross. I mean, a lot of these charts that I've been through this morning, we've given back of gains in the last 2 or 3 sessions, and that happened. But to Dave's point, we've gotten a pretty immediate and dramatic response from this, which, yes, I would much rather see people get immediately spooked so we can kind of just rip the Band-Aid off than people, try to call the bluff of the market and say, no, I think you're going higher. Because that's when you really do typically start going.
Well, I think the market is great at making fools out of the most. And what I find fascinating about this year is, right, we had that correction in March and April, right? So you had a pretty negative start to the year. We get back into positive territory. And so maybe people were out and they threw the towel in right in here. And now we're going to get 2 months of sideways to down. I mean, that's a really frustrating year for investors. If you were sitting there negative year to date going into April and you finally get back to positive and then you get a move that's 3 to 5% sideways or down, that frustrates investors like crazy.
Especially if it's stuff that hasn't been, right. I mean, we haven't heard about gold in a month or so. Everyone's off the gold train. Everything's so, do we rotate back into that? Now, are we going to rotate into small caps? I don't know. That has yet to be seen. I feel like that's always yet to be seen.
Right.
Banks don't really. Some banks do. Some banks look great. Most banks, kind of blah. Biotech still pretty blah. Golly, and I thought we were going to get I know Kevin was really had his eye on industrials, which were close to getting a relative breakout last week, and they've kind of rolled over a little bit.
And I think a lot of that has to do with large cap dominance. When I went through that workbook yesterday, there's a lot of things underneath the surface in XLI, in industrial stocks that look pretty doggone good. They're not large cap weighted. They're not large cap stocks, but there's a lot of, I'll just put it this way. If you had an industrial sector mandate and you could only pick industrial stocks, there's plenty to pick from. Now, the large ones, which are pulling the XLI down, not so much. And I know on a relative basis, large cap industrials versus S&P, kind of a hot mess. But man, there's things underneath the surface there worth paying attention to. I'll say that.
Okay.
And that's not risk off. So we'll see. I mean, we have this move yesterday and today. Let's not forget that markets don't move in a straight line. We've had a great move off the April lows, got back into positive territory for the indice, but something like the S&P 500. Wouldn't it frustrate people if we were sideways to down August and September and then set ourselves up for get yourself sober October and have a great finish to the year? We'll see.
Oh, I love it. Always a fan of strong Q4s.
Yep.
I would definitely take another strong Q4. I feel like we're getting a lot of strong Q4s. I mean, almost every year that I've been at Client First. 2019, we did. 2020, we did. 2021, not really. Not that I remember.
2023, yep. 2024, yep. So, and that it matches, right? Because typically November through April are the strongest 6 months out of the year. And that kind of starts really in mid-October. So do we correct now through mid-October and then have a strong finish to the year? That would be extremely frustrating from a big picture perspective on how this year is unfolded for the average investor. And that's what markets do. They frustrate people. It's good.
Yeah,
Nothing
pretty
wrong with
much
that.
every 2019, 2020, 2020. Yeah, because 2020, oh no, I take that back. 2020 was sideways. Now we did get kind of a move, okay, like mid-November.
Yeah, I was going to say, November, we really took off.
I remember that because I remember telling clients, if we get out of this range, we're going to be insanely aggressive. Because I was there in October.
Right.
For Lunch and Learn. 2021, I mean, yeah, you had you had September weakness and then bottomed, ripped through pretty much the end of the year. 2022 was a bear market and you bottomed early to mid-October.
And that's historic, like that matches seasonally. I mean, the exception would be what happened in 2018, but
well, that's supposed to be the big, right? That's how you get your 6 most bullish months of the year. That's how you get that period. To be historically bullish.
Yep.
Or else the data wouldn't say that.
So, I mean, seasonally speaking, we could be soft to down the remainder of August and September and then see what October, November, December brings. Nothing wrong with a little frustration from the market because, after all, we're not in it for entertainment. We're in it to protect our purchasing power. And so we'll see. Got to wait for price to confirm or deny the thesis that we're in an uptrend. And so far, we remain in an uptrend even after a day like today. And we'll see what we're like in a week. So I appreciate everybody listening. Give us a high ranking on your platform or choice. Make sure you share it with your friends. That means a lot to us. Thanks for being on here again, Ian. We'll be back next week.
Have a great weekend, everyone.